Hello everyone, this is Guru. Welcome to Trade with Guruji. Today we are going to cover options trading. I know first thing, options can be very confusing when first learning about them. In this video, I am going to teach you what options are, why do people trade options, what is call option, what is put option, how to think about them so that makes sense to you on a deeper level. Let's begin. What are options trading? An option is a contract that is written by a seller that conveys to the buyer the right but not an obligation to buy. This is for a call option, or to sell for a put option a particular asset at a specific price in future. In return for granting the option, the seller collects a payment that is known as premium from the buyer. This sounds confusing, right? Yes, I told you before. So options, why do people trade options? If it is so complicated to understand, why do people trade options? Options can be used to hedge, like to make the strategies and all, and to take a view on the future direction of the market, that is bullish or bearish or neutral. For arbitrage, let me put it in a simple way with example. This is a NSE website. You can see here there are two options. One is stock options and Nifty bank options, Nifty 50 options, Nifty bank options. That is indices. And Nifty bank, Nifty 50, everything comes under indices. So what is index option and what is stock option? What is the difference? So in stock options, you can see all the stocks, that is Reliance, ITC, Adani, Bajaj Finance, Motherson. So these are all the stocks which comes under F&O segment, future and options. So we can trade all the stocks in this segment, then we call it as stock options. Just for example, if you are planning to take Nifty trade, so let me explain Nifty options first. That is index options, you can see here, and symbol is Nifty. 3rd June 2021 expiry date. So now, what is expiry date? Expiry date means for Nifty and Bank Nifty options, that is indices, there will be every Thursday of the week, weekly expiry. The contract will get closed every week. Thursday will be the expiry for Nifty and Bank Nifty, and it includes monthly expiry also, that is 24th of June for Nifty and Bank Nifty. For indices, there will be weekly as well as monthly expiry. You can take the options based on the time frame, whatever you want to take. So for stock options, if you see here, stock options, the expiry date is 24th June 2021. So there will be no weekly expiry for stock options. Only there will be monthly expiry for stock options. No weekly expiry. Next you can see here is strike price. So what is strike price? Let's not make it complicated. Strike price, it's a pre-agreed price per share at which the stock may be bought or sold under the terms of an option contract. This strike price, some people also refer to that strike price also the exercise price. This is what we call strike price. So next we'll move on to, so what is call option and what is put option. First question is, what is call option? That when you buy a call option, it gives you the right but not the obligation to buy a specific stock at a specific price per share within a specific time frame. So then what is put option? Put option is when you buy a put, it gives you the right but not the obligation to sell a specific stock at a specific price per share within the specific time frame. Let me explain with taking Nifty as example. So in this, if you are thinking that Nifty will go upside, that is bullishness. So you are thinking that market will go up in coming days. Then you have to buy a call option that you are predicting that market will move up. So how to do that? Let me take an example here in Sensibull. So there will be different strike prices and premium for different strike prices. There will be different premiums. What is premiums? For to buy, for example, Nifty is trading around 15,576, 15,600 there will be strike price, and you have to buy by paying 39.60 as a premium. That amount what you are paying, that is for the premium. Whenever Nifty moves up, this premium will go up as well. So you can see here, so you're thinking market is bullish, will move up, so you are buying call option. So let me buy this call option. After that I'll show you on the graph. So maximum profit is unlimited. If Nifty goes 15,700, 800, there will be unlimited. There is no end to it. You'll get unlimited profit, but what you're going to lose is only 2,970. That is the premium you paid for call option. That is 39.60. And this is one lot it is showing. Now for one lot means 75 quantities, and June 3rd expiry. This is a weekly expiry. As I explained before, this is a weekly expiry, not monthly expiry. You can select monthly expiry also. That's not a problem. Then your premium will be more. That is 230 rupees. Now it is trading. So let me take the weekly expiry. So you bought 50,600 call, 39.6 rupees. So maximum loss you are going to lose is 2,970, the premium you paid. So whenever Nifty, according to you, 15,576, it will cross above 15,600, then you are making money. So you can see at 3,030. Whenever Nifty starts moving in your direction, 7,530. So Nifty is going in your direction, that is upside. So you are making money in call option. This is very simple. Now, the next question is, what is put option? The same as call option, but you're predicting that Nifty will go down from here. So downside. So if Nifty goes down, then you have an option to buy that put option. So let me give you an example in the put option. Suppose you are thinking that Nifty will go down in coming days. So you are buying a put option here. The premium is trading around 47 rupees. You bought a put option now. So in this put option, the maximum loss you're going to lose is 3,525. So if Nifty is coming down, let's take example here. So now Nifty is trading here. So Nifty came down, then you will make profit in put option. For example, Nifty is trading 15,576. 15,576. Okay. So next, you are predicting that the Nifty will go below 15,500. 15,500. So 50,440. After you predicted that the market went down, then now it is trading around 15,400, 440. See the profit, 18,475. So whenever you are predicting the right direction, that is bullishness or bearishness, certain conditions depends upon the your predicting capability. So Nifty, for bearishness or in the market, you have to buy a put option. When you buy a put option, whenever market you are predicting it will go below this price or that price, then you will be ending up with a profit. This is in layman's terms we can explain call and put options in simple term. Hope I explain in a simple term what is call option and what is put option. Just remember, when you are buying a call option, you are thinking market is bullish. When you are buying a put option, market is bearish. Just this is a simple way to understand what is call option and what is put option. So there are so many topics related to option. I will be covering, that is what is in the money, how to select the strike prices, different strike prices. Stay tuned to our channel for more option learning, and also follow us on Twitter for live trading updates. Thank you so much for watching.